Um, First of all, thanks for your time. I'm glad that we didn't do this yesterday. I'm sure your phone was kind of busy. Um, One thing that, speaking on the manager side, that, when everything with COVID-19 happened and we sort of realized the magnitude of it and everything was going into a self-isolation mode, for myself on the music side of my business, the majority of income earned was coming from live revenue, from commissions to be earned off live revenues. And some of those tours were already out. Some of those tours were planned for later this year. And of course, I think most of us were expecting really, really good summers. The issue that, with that, going more towards our passive income and what we have is like, are we collecting our neighboring rights? If we are owners of master recordings, how are we doing with sound exchange? Anything that we can pick up through SOCAN or any of the PROs that we're with. The hardest part was that where was the, for self-managed artists, and for a lot of us that are managers or working in the part where we're self-employed or have just like one or two employees, we have two things: the CERB to discuss, and secondly, and maybe more so in a smaller case, would be the wage subsidy. So one thing that I noticed, and I'd love others to chime in, is that when I was seeing a lot of people working in music that were posting yesterday that it was very easy to fill out the CERB paperwork, but there was so many gray areas in terms of what do royalties count as, our royalties work. What if it was, a payment that hits an automated payment that hits our accounts, but it was for work done prior, et cetera, so on and so forth. So everyone is aware, Sam is my accountant, and we were in touch very, very, very early on when this was happening, probably to the point where if you blocked my number temporarily, Sam, I don't blame you, but I'm hoping that you can sort of shed some light on what's going on now. And for all of us that are mostly contract workers or receiving, royalty revenue and live commissions, what all is happening with the CERB? How are we eligible? What are you hearing?
Yeah, so thanks everybody for having me. So I guess like right now we're, first of all, we're very lucky to be in a country where, they moved very quickly to sort of provide some options to sustain your lifestyle and sustain your businesses. But there's obviously some confusion about how do you apply it and what's the best course of action for you guys, and how do you go forward from here, and how do you apply, and how do you apply all these different strategies in place. So they introduced obviously the Canada Emergency Benefit Program, which is supposed to make sure that people without the ability to go get EI, or the ability to continue to work, this will allow them to be able to sustain their personal lifestyle, right? And it's supposed to be $2,000 a month for anybody that doesn't qualify for employment insurance. So luckily, this program's in place, but there's a lot of confusion as to who qualifies and who doesn't qualify. So first of all, one of the criteria is that you have to be not working or out of work for not earning money for 14 days. And you have to have had, at least in the last 12 months, $5,000 of employment or self-employment income. And so there's a confusion around, so what is that employment income? What sort of income do you need in that place? And what happens with a lot of people that have corporations and they're getting paid through, they run the majority of their contracts through their corporation. And luckily for Liam, he's on payroll, and it's his. But we'll get into a situation later after we're done. But some people are not on payroll, and they run a lot of their money through the corporation, and would they qualify? So essentially, the $5,000 just to break it down and simplify it. So if you had employment income of more than $5,000 in the last 12 years, last 12 months, you qualify. And obviously, you can't qualify if you quit, and you can't qualify if you're eligible for the employment insurance program. So that's sort of the basic qualification on the income component, and it goes to the same thing about self-employment. So if you had self-employment income in the last 12 months, you qualify. But what about if you you run the majority of your business through the corporation, but you're not on payroll, and you're not on but you take out a draw or you take out a dividend? So they weren't really clear on that, and so right now this is sort of rushed legislation, and so we're going to talk about it right now with you guys. But essentially, because it's rushed legislation, it's really not that clear on certain things. But so if you run your business through a corporation and you pay yourself through a dividend, there is a material on the CRA site that says if you're taking a non-eligible dividend, that you would qualify for this program. So if you're an employee with $5,000 of income in the last 12 months, if you're self-employed individual with $5,000 of at least self-employment income in the last 12 months, and you haven't been earning any income for 14 days consecutively, and you anticipate not to continue to work or earn any income from employment or work, then you qualify. And if you have a corporation and you're paying yourself a dividend from the corporation, you qualify as well. So those are the sort of basic criteria that they've put into place. But obviously, it's still, there's still a lot of uncertainty, and it's not that clear surrounding a lot of things with it. But and every scenario is different. So overall, I think a lot of us just have to come to just figure out your situation and then apply for it. So that's sort of the basic criteria, and it's relatively very simple to apply. All you need to do is you just have to certify that you meet these conditions. And it's very, very rare that we see these sort of programs be implemented by the government. Usually there's a lot of burden to access the money, but they've been very, they've moved very quickly on it, and they've allowed a lot of people to use the honor system to get access to money, and which allows them to also provide liquidity for their business and for their personal lifestyle needs. So as it currently stands, it's just based on the honor system, right? You got to certify that you meet these conditions. So what about if you don't, and you've applied, and essentially they're gonna be able to, when you do prepare your 2020 tax returns and you have a lot of income, they will probably, get that back. Don't forget that this benefit, the CERB benefit, is a taxable benefit. You will pay taxes on it. So if anybody abused it, I'm assuming that they'll eventually catch them when they prepare tax returns. But Liam and I were talking, and there's a lot of confusion around, like, so what happens if I did work 2 months ago and I got paid now? What happens if I have some passive income and I collect it now? Does that disqualify me from meeting the 14-day criteria? And I think there's really no language to support that that's employment income or business income, that it was earned in the 14 days. So I would assume that the passive income doesn't really qualify, and if anything you built prior to COVID-19 and you're collecting now would not be employment income. Obviously, this is a rushed legislation, and there's usually legislation takes a while before it gets implemented, and more direction and interpretation bulletins are sort of laid out so people can make better decisions. But I think the overall, the overall strategy here for a lot of people is that, if you're really hurting and, you need access to these funds, you should apply and, take advantage of that to help you and to help your families, right? So, if you earned $100 and you're not sure if that's going to disqualify you, I would, if I were you, I would probably apply, and then you guys can probably deal with that at a future date, right? So
Sam, the CERB
yeah,
is going to people personally as
yeah,
opposed to
that's
paying
right.
corporations.
That's
So
right.
this would be for sole proprietors, essentially,
Yeah.
or our personal accounts. So what we're saying here is that if we receive royalties, and oftentimes those royalties that are coming in, if they're coming in from record companies
Right.
or sound exchange or neighboring rights or anything along those lines, there's generally a delay. Those are pipeline royalties.
Yeah. Yeah.
So like, let's assume that you get paid on SOCAN Day, or our artist gets paid on SOCAN Day. We should essentially just be keeping our paperwork together to show once, because as you said, they're going on the honor system now. They're giving out the money
Mm-hmm.
to make sure that we have the liquidity, but it's going to be on us at the end of 2020, God willing, to basically tell people that this is how much money came in for us from the CERB, and this is how much we made in other income. But that other income doesn't necessarily mean work.
Right. Right. I mean, it's still unclear, and it's still, I think what they want to do is they want to just make sure they save the economy from total collapse, and that's a number one objective. I mean, a lot of this might be, not material enough for them to police and pursue and to go after certain people for, small discrepancies in the law, and, but I would interpret it that if you're collecting money that you earned during a different time, that's not income, right? During this period, and ultimately, if you're out of a job, if 80% of your business is through performing and active work and being out there, and then you have some passive income from work that you perform, so work that you did, 2 years ago, or a year ago, where you recorded an album, or you wrote a song with somebody else, and you're collecting it now. I don't think that's, although you're taxed on it in this year, you weren't out there doing the work right now. So it's still not clear. Well, I mean, that's the problem with this Rush legislation, is that they just threw it out, but the criteria is employment, self-employment income, and obviously any dividends that flow through from your corporations. Uh, those are the sort of income that they've highlighted and are focusing on, right? So passive income, could probably be considered, outside the scope of this CERB. Now, if your SOCAN checks are like 100,000 and 200,000, obviously, you're most likely going to end up repaying all those benefits as well, right? But if you're getting, $150 from a SOCAN check, and that falls right into the 14-day period, then that sort of, I don't think it should mess you up, right? But
So just for clarification, and I know
yeah,
that, again, the Rush legislation means that everything's sort of changing on a day-to-day basis.
yeah,
But if we are, technically speaking, we're all self-employed, and it's every 4 weeks that we have to reapply, I believe is what they've
yeah,
made
yeah,
mention of.
yeah.
So if we were going to have to reapply every 4 weeks, is there like someone at the government that are they monitoring bank accounts to see other activity that's going in, or again, are we going to probably be sticking with the honor system? Because essentially, if think about it, we've got Sound Exchange, if anyone is still getting hard checks from Sound Exchange, those I think only got mailed from DC last week, so those will be coming in probably this week or next. We've got like a SOCAN day that's in there. All of these payments that are just sort of happening that we're looking at, and it's great because it gives us some liquidity and it allows us to keep us running our businesses for as long as we can, and also, you know, buy groceries, pay rent, pay mortgages. Is that something that we know of yet, that if we go on 4 weeks from now to reapply for, if we receive that income, should we be not depositing that right away? Because my gut is anything that comes in now, put it in the bank, get it done.
Yeah, I mean, you'd have to, you have to sort of go on a case by case basis with that. Obviously, I think, a lot of, for instance, like for you as a manager, the majority of your revenues are from live revenues, right? And
Yeah.
and obviously you have a corporation that's a blocker, that sort of its own separate legal entity that captures all these sort of revenues up there, and then it flows down to you. But on a consolidated basis, you and your corporation have now been severely impacted because of the live events have been completely shut down. You can't earn a living, right? But there might be more activity on the corporation side where the corporate entity itself has its own overhead, has its own, might be able to generate certain revenues, but if it can't pay you enough to survive, then you're severely impacted, right? So, I mean, and it's the same thing as a self-employed person. If you might get some residual revenues coming through, and then does that impact you? But anyways, I think what the Prime Minister mentioned is that they're eventually gonna they're gonna modify this program or add a new program for people who are working less than 10 hours a day, right? So they're trying to make sure that enough people who are impacted by this COVID-19 are eventually taken care of. So I think at this point, if you have been impacted by it, and if your revenues have significantly gone down, if you're an employee, it's pretty straightforward. You're completely out of a job, then and you don't qualify for employment insurance, you should apply, right? But if you're a self-employed individual and you're not working, but there might be some residual, some passive income revenues that are coming down the pipeline, or you're collecting some revenues, I think you need to make a judgment call and apply. If you feel like if you need the money to help sustain your business, then you should apply. I think overall right now, the majority of businesses, we have to think about survival mode, right? We don't know what's going to happen. Realistically, we're entering a new era. We don't know where we're going to be, how businesses are going to operate after this, what's going to happen to the hospitality industry. It's going to change the economic landscape, definitely. And are we going to start to go back to movie theaters? If somebody sneezes beside you at a restaurant, how's that going to impact you? So I think right now, for a lot of us, we have to, and it's got to be on an individual by individual basis. You got to look at it and say to yourself, how do you sustain yourself over the next 6 months or so? Just so we can figure out what's happening after this, because unfortunately, the music business is now, there's still there's good amount of money coming in from the passive side, like the streaming, the music royalties, the music sales. It's a better position than when it was 15 years ago, but a lot of people still make the majority of their money through live. And if live and big gatherings are going to be banned by, or banned by certain governments, and then after that, is there enough confidence in the consumers to be going and putting their money into these events? So I think on a case-by-case basis, everyone should really figure out what's the best course of action for them. So on the personal side, if ultimately you need to make sure you have enough revenues to sustain make sure there's the roof over your house, your head, there's food on the table. That's the basic needs. And then if the business is not providing for you and your business has been severely interrupted, you as an individual have to make a decision whether you got $100 in the 14-day waiting period. Is that gonna disqualify you? And so this is the honor system, and I think you have to make a decision that's you're going to be able to feel comfortable with, but also that's going to allow you to meet the needs of your family and yourself, right? So I think the CERB is definitely personal. It's supposed to help people who can't get access to the employment insurance program, who have stopped working because of COVID-19, so those are the two main things. And you don't have any other source of employment or business income during that time. So that's a great program, and it really helped a lot of people. And I think yesterday they said close to 1 million people applied to that program, which means a lot of people are hurting. Obviously, some people might be abusing it, but I'm sure there'll be a system in place to capture them. And as to your question, whether they're going to police it, I think I was hearing that they're going to ask volunteers to, the government's calling on volunteers to come and support them, and there might be some policing mechanism through it. But I mean, obviously, if you're making more than $2,000 and you're trying to take advantage of this, ultimately it'll come back to haunt you. But it's on the honor system, and I think a lot of people need it, and we've got to make sure that people don't abuse it, because people do need this program.
I had just one more question that I wanted to address before we get into some of the other ones. I see some amazing ones, including from Jeff. Hey, Jeff on the West Coast. Number one would be, if you have a corporation or a company that's paying you. In my particular situation, I own my own company where I am the only employee. And so I'm paying myself a certain amount per month out of that, and then remitting the tax to pay directly to CRA. Is it more beneficial for someone like me to stop my payroll, stop paying myself, and go on CERB? Or should I be using that wage subsidy benefit to continue paying myself and then earn money back into the corp, as opposed to is it 6 of 1? How are you looking at that?
Yeah, well, I think the wage subsidy, can provide you it does provide more money to the pot if that's the case. So the wage subsidy, we're still unclear as to what's going to happen with the owner managers. For instance, for you in your scenario, Liam, are they going to put certain restrictions on there? They definitely said it's available for people who have a corporation and who pay themselves a salary. But there's more guidelines coming down to determine if there's going to be different caps or different amounts. Well, right now, the wage subsidy gets capped out at $847, I believe, every week. So, 4 weeks, that's a little bit more than obviously the $2,000 CERB $2,000 benefit. So obviously, I think it's more beneficial for somebody who earns money in a corporation and pays themselves a salary to stay that way until it's very clear what that subsidy looks like for owner managed employees, right?
So looking at just one example here, and then Amy, I'll throw it over to you. Sorry to take your job for a moment, but from Jeff, which is a really good question. So he's noted that, are you suggesting that people running corps that aren't on payroll should continue invoicing for things like Sound Exchange, SoCan, et cetera, the passive incomes that are coming in? and use those funds as a buffer, and then take dividends as you see fit for yourself to have some funds to stay afloat. Is that still considered passive on the personal side?
So dividends from your corporation would be considered businessing. Like it's on a consolidate, they'll consider it to be, you know, income, and then they'll hit you. I mean, that technically you're going to be offside with that for sure. So I wouldn't take money out of the corporation, you know.
And
If you're
pay
going
it
to
to
do it,
yourself on a personal level?
yeah, on a
Don't
personal
do that?
level.
Yeah.
Yeah. Like if you know, it's still unclear. That's the problem with all this, is like how's that going to work for that scenario? You know, you definitely, you know, probably Jeff is definitely feeling the pain. A lot of managers are feeling the pain. But if they get a small check from you know, Sound Exchange and all that stuff, then yeah, I mean, I would be on the conservative side and not draw money out of the corporation during that time.
But if we run a corp, we should definitely still be invoicing those things to keep building money in the corporation,
it's a separate
because it is a
legal
rainy day now, right?
it's a separate legal entity for sure. Like, I mean, but when you do take, so I mean, there's two ways you can pay yourself out of the corp, is one through a dividend and one through salary, right? Obviously there's avenues for abuse there, uh, and you know, if you all of a sudden you know, you're on a $5,000 salary and your corporation can sustain it for, you know, the income's still coming through, and you stop yourself from that, and then you go on the CERB, it's the honor system. You know, that's, you know, I don't know if that's going to be, you know, definitely that's abusive. I mean, if you still have the same consistent revenues, and then all of a sudden you stop paying yourself, and then you go on the CERB, then that's a different, you know, that sort of, in my opinion, it comes off as abusive. But you know, if you still have the same, your revenues drop 30%, and you're still on the same payroll, and you take advantage of the 75% wage subsidy, you know, then that's perfectly fine, with us just knowing exactly how that's going to work for owner managed business employees. So you know, the corporation is a great tool for tax planning, and it allows you to manage your income level. But I mean, if you're going to stop your pay and then tell the government that you're not employed, you know, at some point, you know, in an audit, that might come back to haunt you. I mean, it's based on the honor system, right? So if your revenue's gone down and you're struggling, and you need to live, then that's what the program is there for, right?
Okay.
Yeah.
Amy, do you want to, I feel like we've got a lot of really, really, really good questions. Do you want to lead that away?
Yeah, I can. So I'm going to try and get to everyone's, but please feel free to type me a message if I've not gotten to you in the next little bit. So we did have a few people wondering about timing in applying for the CERB, and whether, if you've got income coming in, maybe during this first period, are you still eligible and able to apply later on and only claim it for those subsequent weeks? Or do you have to apply in this initial eligibility period to take advantage?
No, it's essentially, so anybody who's applied right now, it's a 4-week period, and it expires on April 11th and goes back, I think, to March 18th. So anybody who met the criteria during these 4-week period can apply. And then after that 4-week period, you have to reapply if you still meet the conditions. And if somebody who didn't qualify during this period qualifies in the second period, then they should apply. So, and then you do the same thing. After 4 weeks, you go back, you reassess the situation, and you reapply. So that's what they're basing it off, is that they anticipate, like, at some point you're going to go back to work if everything goes back to normal within a month or two, then this program might, might go away. Like it's going to be there. They've committed to it, but for you, you might not qualify if you go back to work and you start working. So every 4 weeks, you got to reapply. It's not automatic until the end of the month. So you go back and so the thing that you're doing is you're certifying. You're like taking an oath that you qualify for this program. So and you got to do that oath every time you apply.
Right. Okay. And so questions about eligibility and income as well. We talked a little bit about passive income, specifically royalties, but where would sort of donations or honorariums fit in, say for artists doing live streams, or also, online record sales if they've got a few, digital downloads, or they've sold some vinyl or t-shirts or something from their web store. How do those things fit in with your eligibility?
Yeah, so I mean, let's just talk about income for a minute. So income is so on the business side, it's a venture and trade, like anything that you've generated through trade and through providing services, right? So selling a few CDs online would be considered business income, but there's a cost of sales associated with it. And at the end of the day, it's ultimately what you take home from the sale is your revenue. So you can't just consider a $15 sale of a CD as your revenues. It's what's left after your expenses is the revenues. And at the end of the day, like, I mean, if you were talking about $30, $40, of those sort of miscellaneous sales and stuff, I mean, you got to make a judgment if that's, if it's material enough for to disqualify you. And I don't donations. If you're a band and you're running, you're running a crowdfunding campaign to be able to generate some sort of revenues. The CRA has looked at the crowdfunding as income. So, but if your crowdfunding campaign runs for a few months and you get paid at the end of it, then I think, that's fine, because I think maybe, you could look at it on the cash basis when you collect it versus when it was being raised through the platform. But there's also, like, if your mother gives you, $200, that's not income. If you lend somebody money and they're repaying you, that's not income. Income has to be generated through work, generated through trade, or through the performance of a service.
So then, more questions along those lines. Would it be recommended that, say I have a few things kind of trickling in, or maybe I'm teaching a few online lessons, that I should stop doing those kinds of things and stop that flow of income to be eligible for this? Because for most people, those things are not going to be close to enough to sustain themselves.
Yeah, and I think for that, you have to make a call on that on your end. But I think they're coming down with the new program that will allow people in that scenario to be able to apply for the program. So technically speaking, I think, and so here's the issue at hand that we're facing, is that usually legislation like that will go down, will be written, it will be, thoroughly vetted, then it'll go down, it'll get implemented, and the CRA will then interpret this legislation. And so the civilians and the population will then go about their day-to-day stuff and make decisions. And then the CRA will challenge your decisions, and they'll say, we don't agree with you. And you'll say, no, but I interpret this way, and the CRA will say, no, we interpret it that way. And then they'll go to tax court, or they'll go to court, and eventually a decision will be made that will sort of set the precedence for what the law, or how the interpretation of the law should be, right? So unfortunately, this is Rush legislation. There's no, you know, it's, you know, you have to make certain decisions that have to benefit you as an individual. Obviously, you know, if you got to weigh the options, and don't forget, like, you know, if you're working as an employee, you can't quit and come and go and apply for this. So keep that in mind, right? But for a business, if your business is severely impacted, if 98% of your business is dried up, and now we're dealing with like 2%, I mean, I think, you know, you got to make a judgment call on that, right?
Right. Okay. And then I guess along those lines, there were a few people messaging me wondering about the penalties. So if they do maybe make a decision that the CRA challenges down the line, what kind of penalties might they be looking at?
So I mean, I'm not sure what those penalties are going to be, but keep in mind this is taxable. So if you know, if you have anywhere between, you know, if you have $60,000 of income, you know, you're going to be around the 38% tax bracket, right? So you know, a lot of these, they're not withholding any taxes right now because they're trying to just rush this money out, make sure that you know, people can continue to live and there's not going to be extreme damage to the economy. So they're just rushing the payments out without withholding any money. But keep in mind that when you do file your taxes, you will pay tax on this, and you can pay 20 to like 40% of that back depending on your tax bracket, right? So I think at the end of the day, you know, the government's probably counting on that they'll catch you at the tax time and be able to do that. So they haven't been really clear or even have even mentioned the penalties. But you know, if we look at other penalties in the CRA or the tax system, it's really, you know, usually 5% to 20% penalties, and if you know, they find that you did something grossly negligent or you know, false, you know, don't forget you're making a statement on that you qualify for this. So I mean, there might be criminal charges if you're really abusing it. But you know, I don't know, but it could be anywhere from 5 to 20%.
Okay, thanks. And then another quick question about income. Are other emergency funds, say things that artists might receive from Unison Benevolent Fund, is that something that would affect their eligibility for the CERB?
No, I don't think that affects it. Yeah.
Okay, and I've got a question here about the CEWS. I guess that's the emergency wage subsidy that we've talked about a little bit.
Yeah.
And just the challenges around having to show the 30% decrease in revenues because the losses won't be seen for a while. So the question is, if the losses are going to be more evident in the future, should we still apply now, or should we just apply for the 10% wage subsidy and wait on a sector-specific solution?
So they haven't been, they're still not clear on what the 30% decrease in revenues means. Does it mean, you know, what you invoiced versus what you collected that month? Obviously, and so the program runs from March 15, 2020 and it ends in June, I think, 2020, right? So, and you have to assess it on a case-by-case basis, and the way you would still have to run payroll the way you ran payroll previously. You know, deduct the taxes, remit the taxes, and then you would go to the CRA portal, apply, and then they would send you the funds back. So on that front, you know, that clearly 75% is better than the 10%, but there is, if you do apply for the 10%, they said that they will offset it against the 75%, but you know, you should, if you know where you're at and you know that revenue's decreased and you know, instinctively, I think the way it should work is that whatever you invoiced in 2019, like, so they're looking at it on a month-to-month basis. So let's say April, you invoiced, you know, $100,000, and now it's $70,000 that you've invoiced. So you've met the criteria. That's gone down 30%. That's and you still have maintained the same payroll, you know, and you get back 75%, which is capped at $847 a week. You know, that's still a better scenario than the 10%.
All right, thank you. And yeah, we've got, I guess, still lots of questions around the income. And so someone mentioned that they thought we'd be allowed to make $500 in those 14 days, I guess, is some of the new updates. I don't know.
Yeah, it's so there's probably going to be updates around that. I haven't seen that, and it's, you know, it's possible, you know, that those sort of exemptions will flow through.
Right.
But, you know, but don't forget, like, as a business though, like, you have to, you know, you got to make sure you're taking into account all your expenses for that year. So let's say you know, you sell a CD, the cost of the CD is $10, you're left with $5. There's overhead, there, you know, so you're, at the end of the day, there's, you know, there's got to be some sort of accounting on that income that will, you know, take into account the overall overhead and the overall expenses of the business. So you might be at a loss. You might be generating revenues of $1,000, but once you've done all the accounting, you might be at a loss, and because you just got to make sure that you're sort of taking that concept into play here. Is that, yeah, you might have generated $100, but because of the decrease in all your other revenues, the overhead is still at the same level, and you're really running a loss. You're not profitable, and therefore, you know, it's still, you would still qualify, in my opinion, right?
Okay. Another question about the wage subsidy.
Yeah.
If your staff are self-employed, did they count under that program, or is it only for employees whom you pay payroll tax for? So I guess if you've got
it's payroll. It's payroll. So, like, I think one of the things, obviously, there's always, you know, politicians will make certain decisions to obviously help certain numbers, and obviously a lot of what the Liberals have done here, and it's great that they did it. We're very lucky that we live in this country that they can do it, but obviously a lot of the incentives here are focused around the, you know, the jobs, and making sure that the job numbers don't get completely demolished. So a lot of it is making sure that people can sustain jobs, and there's really been very little done around, well, I mean, yeah, employment expenses are a big part of majority of businesses, but there hasn't been much done around, like, other overhead, like, you know, contractors or other supplies, but maybe they'll probably come down the pipeline, right?
So I guess,
there's, yeah.
in that
Yeah, it's employees only, not contractors. Yeah.
So then in that situation, if you're trying to keep those sort of contract employees on, there's not really any support available for that business to help subsidize that? Like, are they better off to point their employees to the CERB in some manner?
Yeah, I mean, if they can't keep them on, yeah, and they can't get the subsidy, you know, and it's still like, you know, it's unclear whether you hire them as employees. The problem is, then you've sort of tainted them going forward if you do hire them as employees, because then, you know, you have to review the employment versus employee versus contractor rules going forward. If you do hire them as employees, then it means you might have to keep them on as employees going forward. And so that's an issue. So yeah, I mean, the only way that they can benefit is probably go on the CERB program. Those people.
Okay, and then there was another question here, I guess a strategy about charging for some of your services later. So maybe if it was lessons, you'd give some lessons for free, but then kind of charge the full amount for a final lesson outside of the like eligibility period after on, so that you could qualify. Is that something that makes sense?
Yeah, so yeah, I didn't get that, but yeah, I mean, maybe we could deal with that later, I guess.
Okay, sure. Okay, sorry, another question has just come in. So if you've been laid off from a part-time hospitality job, applied for EI, but you're still able to run another at-home business teaching lessons, does that affect your EI? Or is EI application automatically moved to the CERB?
No, the EI, if you're getting money from the EI, you can't get the CERB. And if you're running a side hustle while you're on EI, you have to tell them that what money you're making, so they can adjust your benefits accordingly.
Okay, great. And folks, I apologize if I've missed your question. Please feel free to add additional ones in the chat. We've got a few more minutes left before we're going to wrap up. And we've got one that's just come in wondering about Canadians who are out of country. I guess wondering if they're eligible to apply.
So you're eligible if you're a resident of Canada. So if you're abroad for about a few months, but you're still a resident of Canada, you file taxes in Canada, you're eligible. But if you've left the country and you've departed and you haven't been filing taxes in Canada, you're not eligible. Okay. So it's only eligible for Canadian residents.
Right. Okay, great. Liam, just wanted to check in with you if there was anything else that you wanted to bring up as part of the discussion. Oh, sorry, I have to unmute you. There you are.
Are we good? Yeah. No, I mean, the one thing I was looking at, and I really appreciated Susan's question as well, where we talk about our staff that are mostly contractors. Yeah, it seems like my general takeaway from this is to just apply. And it sounds like they're going to do revision after revision after revision on this legislation to try and get it right. But I mean, personally speaking, I would rather have cash in hand while they're doing those revisions and know that I'm not spending like this is free money, because A, we don't know how long this is going to go on for, and B, there's a chance we will have to pay some of that back. I think that it might be great to regroup once they've been able to sort of talk about gig workers a little bit more, and people that are contract to contract, because it seems like, you know, the goal of CERB is to help us out during an incredibly troubling and confusing time, just to sort of keep some semblance of normal. But the one issue is that, like, well, if we're still working, obviously all of our revenues, I would say pretty much everyone on this call, all of our revenues have taken a hit compared to where we were last year. But are we still able to work, you know, somewhat to bring in those revenues? Because wouldn't that be great if we could, and do it without being penalized? Yeah, I think there's definitely like almost a breakout session that can happen from here, that people that run their own companies that are paying themselves, as well as another, you know, employee or two, and people that are you know, self-employed and sort of just doing this as sole proprietors and whatnot. But no, these are some really good questions.
Excellent. Well, any final words from you, Sam? Any words of wisdom?
I think so. Just if you're running a business as well, there's one more program that they introduced, which is the emergency business bank account, which is going to allow you to get $40,000 of liquidity. It's a form of a loan. If you repay it by December 31st, 2022, you know, you'll get 25% forgiven. But to qualify for that, you need $50,000 of payroll in 2019, $50,000 or more of payroll in 2019. So I think overall, we just have to find a way. Everybody here has to find a way to get through this period, so we can get back to normal, whatever that normal is going to be going forward. Luckily, we have these programs in place that can help you out. So you just have to make some decisions. If you're struggling and when you need the money, doing disqualifying yourself for an immaterial amount, it's probably not a great idea. So and then also, if you do have a business and you have a corporation, the Business Development Bank of Canada is also, they've put a lot of money into that program to allow, people to borrow money to get them through this next period. So there's a lot out there, but we have to, people have to just make some decisions and get themselves through the next 4 to 6 months, so we know what's going to happen afterwards.
Right. Okay, well, thank you everyone for joining us, and especially to both Liam and Sam for taking the time to share information with everyone. It sounds like we got a lot of interest in having additional sessions to get more into the details as the new legislation comes out. So just as a reminder to everyone, we have recorded this session. We'll be sharing it soon once it's all processed and uploaded. You can find us at mmfcanada.ca and also at MMF Canada on social media. So we'll be posting about that as well as future sessions on those platforms. And I'll also be sending an email out to everybody with a short survey as well as a link to the reference document that Sam so graciously put together for us that has a lot of details about some of the things we discussed today. So with that, thank you again, everyone, and hopefully we'll see y'all down the line. Have a great afternoon.